Hey everybody, what's going on? It's James here and wanted to shoot a quick Bitcoin / cryptocurrency market update for Friday, September the 11th. And before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel, and if you have not already, make sure you join the Patreon. It's just $7 a month and gives you access to more frequent updates. So I hadn't actually planned on doing a video today. This is kind of off the cuff. So probably be very, very light on the editing side, and also a lot of the stuff that I'm going to talk about is just going to be off the cuff because I haven't even really looked at charts today. I've been kind of obsessed lately with coding stuff, like programming stuff, and mainly because I've been coding a lot of little tools and stuff to use with my trading because I don't trust other people's tools. And I know that sounds a little bit, probably ironic, because when the tools are done, I will probably sell them, because that's, what I've always done in my business is sell software. But I don't trust other people's tools, and I specifically don't like using web-based tools because I don't have access to any of that code, right? So I don't know what that code says on their end. I don't know what that code says or what data it's actually retrieving or what it's actually doing. And I don't know what kind of security they have in place to protect my API keys from, if they're stored on a server and all that kind of stuff. So what I'm doing is working on some desktop-based software for myself first, and then eventually I'll probably release it to the public as well. And so I've been pretty obsessed with that lately, and yeah, that's what I was up to today. So I was also updating my trading course, shooting new videos for 2020 for my trading course that I released a couple of years ago. So been fairly focused on that, but it's kind of good. It's kind of interesting because you'll kind of see how I evaluate these markets, off the cuff, without having, 30 minutes to look at this prior to shooting the video. So one of the main reasons I wanted to shoot this actually was I happened to get on Twitter. I was getting a little bit burnt out today and a little bit wore out with the work, and so I went to Twitter to kind of goof off, I guess, if you want to call it that. And I saw somebody, and I'm not going to call anybody out by name because I really don't want to go back to where I was last year, where these people bothered me so much that I started calling them out by name and stuff. It's just the negativity eats at you. But there was somebody on Twitter basically telling people that if you're spending more than an hour a day learning to trade, and you're not trading with $250,000, that you're wasting your time. And I think that's probably one of the worst pieces of advice that I've ever seen in my life, right? And it's a twofold. It's a twofer, because number one, if you don't know how to trade, there is not a planet in the universe where it makes sense to start with $250,000. First off, most people don't have $250,000. Second off, there's a very high likelihood that if you start with $250,000, you will lose $250,000, right? Because the emotions that are going to go into that are they're going to absolutely wreck you. If you can't learn to trade with $1,000 first, you have no business trading with $250K. So that's the first part that was bad. But the other thing, telling somebody that they shouldn't be spending more than an hour a day learning something, it's the most ridiculous stuff. If you really want to learn something, I mean really learn it, not, I kind of got the idea, but I mean really learn something, understand it to the point where you can explain it to somebody else, where you know it inside out like the back of your hand, you better be looking at it more than an hour a day, right? To get to where I'm at now with trading, I started about a little over 3.5 years ago. No, not 3.5 years ago. Look, I can't even do math. It was May of 2017, so I guess 3 years and 4 months ago. But over those first 3 years, I was probably looking at charts between 8 and 12 hours a day, right? So according to this person, that was time that, I was very, it was time that wasn't very, very well spent. It was poorly spent time. Well, I'm going to call bullshit, because I ended up replacing my business income with my trading income as a result of those efforts. And long term, I'm not even halfway through my life, if we're going off of averages, or maybe I'm right at halfway, I guess, right? I now have a skill that will pay my bills, assuming nothing crazy happens in these markets. I have a skill that'll pay my bills for the rest of my life. I will never have to rely on a job. I will never have to rely on a business. All of my business income is literally extra income. It's income that I can use for investments or for discretionary purchases and things like that. In my case, I just invest everything for the most part. But it's just insane to me that somebody would tell somebody else it's not worth spending more than an hour a day learning a trade or learning anything for that matter. It's like the whole coding thing. I tinkered with code starting around the time I was 12, and I would tinker with it for 3 months, 4 months, 5 months, 6 months, and get okay, but never really get over the hump where I could really develop anything. I understood like the basics, but I couldn't really develop anything. And then in the last maybe 4 to 6 weeks, I started coding like 6, 8, 10 hours a day, right? Some days 13, 14 hours. And well, magically all of a sudden it's like, oh yeah, I know how to write an application, like a real application. You have to immerse yourself if you really want to learn this stuff, right? You have to immerse yourself. If you're not willing to immerse yourself, at the very least, I hope you're not playing with much money, because it's a dangerous game to play, right? So let's talk about the charts real quick. I'll try to keep this video under, I don't know, we'll shoot for 15 minutes, I guess. The first chart I want to take a look at, it's not a 5-minute chart. No one cares about that unless you're day trading. Let's look at a weekly chart. Okay. Don't care about this. Don't care about this. What do we got? All right, so here's what I see when I look at this weekly chart. And of course, we got 2 days left in the week, so a lot can change. A lot can happen in 24 hours or 48 hours. But right now, when I look at momentum, we have this downward sloping, trend line or resistance that goes back to the top in 2017. We see the exact same thing with RSI. So contrary to what a lot of people will tell you, I personally believe that we are in a bear market and that we have been in a bear market this entire time, right? That has not changed. We have been consistently putting in lower highs of both momentum and strength. And I didn't look, but let's just check the money flow indicator and see what it says. Should have it saved in here. Yeah, there it is. Okay, so money flow indicator, let's just blow this up. So this is going to be, oh, wow. That's, okay, no, okay. Had a brain fart for a minute. Yeah, so if you look here, this was the high in 2017. Here's the high in 2019. And here's the high in 2020. And you can see that obviously things are going downhill, right? Money flow indicator doesn't look great. So let's take that one off. Let's look at, what's another one that people like? People like on balance volume. So let's look at that one. On balance volume looks a little better because if you look at 2017, it's right here. And it actually is pointing up, right? It's moved up. So that one doesn't look so bearish, but almost looks like, and guys, I'm doing this off the cuff. I haven't even looked at on balance volume in probably a year. What does that look like to you? Ask yourself objectively, what does that look like, right? At first, I was going to say it looked like a parallel channel, but it doesn't really, does it? It looks more like a rising wedge, which is bearish, right? So, I don't know. Still looks bearish to me, but here's what I'll say about being bearish and all that kind of stuff. You're only one resistance away from being bullish, right? If you're really objective and you're not getting like emotionally tied to the outcome, you're only one resistance away. So if this suddenly goes up and breaks through this and starts putting in higher highs, that can, it can happen very quickly. Same thing with RSI. Now, when you look at RSI, it is interesting, and I want to see where the week closes at. But if you remember a few weeks ago, I was talking about the top of this box being support all through this last bull market. See this? It would come down, correct to it, and then bounce off of it. Well, that's really all we've done so far, is we had this high, and then we came down to the top of this box. So it's very possible that what we're actually seeing is this. See this? Broke up, came up, just barely got into the overbought territory, corrected, and this, by the way, was late 2015, early 2016, corrected down to the top of this box right around the 50 to 55 RSI zone, right, just like here. And then off she went, right? Off to the races. The bull market started. So is it possible that that's what we're doing? Yeah, for sure. Yeah, it's for sure possible, right? So I want to wait and see where the week closes at, and I want to see kind of how the next couple of weeks play out before I get too like locked into an opinion on the macro picture. For right now, it's still bearish. For right now, I'm still looking for more downside, but that can change very quickly. We have come down. We've tested the 19-week moving average, which I've talked about in the last couple of videos. So I'm not going to beat a dead horse on that. And obviously, we had the tweezer bottoms on the 3-day. We didn't get near as big of a move off of that as it would have been nice to get, but we don't know if the move is over yet, right? It's entirely possible that there's still ammunition in that tank or fuel in that tank, and that we're still going to go back up to that 11K level. So we'll have to kind of see how that goes. Right here, we are getting these two tails coming down. Not great, not the perfect tweezer bottoms, but definitely something that I'm interested in. I think it's a bullish looking pattern. What I would say is just be mindful that right now it's having a really hard time breaking back above that 10.5K resistance, right? Now that was, if we draw this back here, well, I'm going to try to draw it back if I can get TradingView to cooperate. All right, so basically all through here, right, support, resistance, 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 and now we're back underneath it. And this looks a lot like a bearish retest, but I'm not short on Bitcoin. I'm still kind of waiting, right? There have been some good trade opportunities on the smaller time frames, the 15-minute charts, the hourly charts, etc. But I haven't really seen anything that makes me want to, try to short this retest. I'm still, I still prefer to wait to see if we can get up to this level, and then, potentially I'll look for shorts up around there, unless something changes. And hell, maybe I go long, but I doubt it, right? It would be very unusual of me to go long there, because we would literally be sitting at resistance. Okay, so just kind of a couple levels to keep an eye on there. And of course, don't forget, it's easy to lose track of all this stuff, but don't forget that we do have our 38.2, which even in a bull market, it's very common to come back down to the 38.2 Fibonacci level. We've got that sitting down around 9,200, which of course acted as support back through this level. And it would fill in that CME gap down around 9,600 that people are worried about, right? If we lose that, then of course, we can start talking about lower levels. For example, the 61.8 down around 7,200, right? It's actually 71.54 on this particular chart, okay? And of course, 200-week moving average, moving up, moving up, moving up, right? Entirely possible we get back down and test that average again. So we'll kind of see how that goes. Let's take a look at let's look at a 3-day chart. I don't think I've looked at one since the close. Well, the last close, really. But yeah, we just had another close. So if I look at a 3-day chart, it's kind of the same story. The same levels that I'm watching as far as price goes. RSI looks a little bit different because we had this falling wedge, which was a bullish signal. We broke out of it. Had the head and shoulders up here, came down, and we did find support on this bottom trend line here, right before we got to bounce off of it. So that's interesting. But what's not interesting, or maybe it is interesting, I don't know, but what's not good news is, we are pretty, solid inside this box here, right? We did not really play inside this box much in the last bull market, right? I mean, there were definitely times where it did come down. I guess really, if you look at it, there were several times. I'm wrong about this. For some reason, I was thinking incorrectly, but I was thinking it really stayed above that box. But if you look, I mean, here you go, right? Good example of why it's always a good idea to go back and reanalyze things, because somehow I missed this. But look at that, right? A lot of these corrections in 3-day, they did come right back down to that like 40 to 45 level, right? Boom, 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 okay? And here we are, look at that, right down to that level. So maybe that's not as bearish as it looks at first glance. That's interesting. I'm not sure how I missed that. But the 3-day chart, there's not going to be a lot of difference between it and the weekly. The daily chart, let's take a look at it. Let's see where our 50 moving average is at. So just want to look at price for a second. 50 moving average is currently at 11,250. That's really what I'm waiting for. Still hoping to get some kind of retest, a bearish retest of that, so I can go short. Not too eager to try to front run that, right? This feels a whole lot like October to me, right? Where I was waiting for the retest of 9K or 9,500, and eventually I thought, gosh, I guess it's just not going to happen. And then right about the time that I finally gave up on the idea of it happening is when it pumped up, and yeah, it threw a wick up there. But if you look where it closed, it basically closed right at resistance, right? Easy short to take right there. So I'll wait. I'll wait on a position trade. See if we can get that retest. Don't forget that obviously this was the neckline of this head and shoulders. It's the 50-day moving average up there. And also it's going to be right up there in line with that 61.8, assuming it doesn't go lower first, right? Right now that 61.8 is sitting right at 11,217. So got to keep a close eye on that. And let's look at RSI. We'll talk about volume in a second. So in RSI, we had this upward sloping trend line. Looks like my line got moved a little bit. Let me fix it. So it looked something like that. That line's obviously not really, I don't really care about that line so much anymore. What I would do now is pull this down like this, and I would be watching to see if this line acts as support on RSI. And then of course we have the downward sloping red line, which is going to be a resistance. Could play out a couple ways. Could play out like this. Maybe this ends up being resistance like this, right? But essentially on RSI, we're just between two levels, right? We are between support and resistance. What I would say is be mindful of the selling volume down here, right? When this thing started to collapse like this, there was a lot of selling volume. High sell volume is indicative of distribution, right? So a lot of times you'll get the high sell-off, and then you'll get a weak rally back up to support flipped resistance. And if you see a really low volume rally back to this level, that's another sign that this was probably distribution, right, after this long up move. So that's kind of what I'm seeing on the daily. As far as the daily gaps that I'm watching, I'm going to take these two lines off. We'll take the 50 off. But I'm still watching for the liquidity gap that's living down around 77.50 or so, and I'm watching for this one down here around 5,500 or so. I still believe that both of those will be filled in, but nothing is guaranteed. There's lots of levels between here and there, right, that I need to look at and kind of play it level to level. The first major support, as far as a moving average support goes, on the daily is going to be down around that 200 moving average. It's down around 9,100 bucks right now. So obviously, it's entirely possible that it moves down there and that it does find support there, right? Wouldn't be shocking to see that. And it seems like I was just talking about 9,200 a few minutes ago for some reason. I don't remember what the reason was now. Not a clue why 9,200 is on my mind. Having those brain farts recently. Oh, yeah, 38.2. Sorry, there you go. So you've got a Fibonacci level that's sitting down there as well, if it's an uptrend. Whew, man, maybe I've used up too much mental power learning to code here. But that's what I'm seeing on the daily, the 3-day, and the weekly charts. I'm not sure where the time's at. I had to stop it and check a few things. So my timer says 20 minutes. It's probably a little less than that. But, for a little mini market update for a Friday night, I think that'll probably do us. So I am going to go ahead and wrap up there. Please remember that I am just some guy sitting in a spare bedroom. So nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, and the list goes on and on. All right. All jokes aside, you really do need to be serious about this stuff. Take it seriously. Don't be trading with money you can't afford to lose. It's very likely that you are going to lose when you're starting out. That's just part of the learning curve. But as long as you don't put yourself in a situation you can't come back from, you stand a good chance of learning and eventually becoming a profitable trader, hopefully. So, again, with all that being said, this is James with Crypto Common Sense reminding you to please trade safe.